Hello and welcome to Policy Watch, the show where we bring you the week's biggest business stories and join the dots to unravel their impact. I'm Surabhi Upadhyay. Well, the week gone by was one in which politics mingled with economics to generate some rather controversial headlines. While the country's richest man saw an FIR being lodged against him, the Aam Aadmi heaved a sigh of relief as the government left passenger fares unchanged in the railway budget. Economic data was a mixed bag, inflation finally cooled off, but so did industrial activity. Joining us on the show today to make sense of all this is Rajesh Mahapatra, Executive Editor of the Hindustan Times. Thanks so much, Rajesh, for joining in. Great to have you. We'll start first up with our first big story of the week.
The Delhi government's decision to file an FIR against Mukesh Ambani, Veerappa Moily, Murli Deora and former Director General of Hydrocarbons V.K. Sibal has created a controversy. Kejriwal alleged that union government conspired with India's largest private firm to hike the price of natural gas produced from the Krishna-Godavari basin. Last December, Union Cabinet had allowed RIL to charge higher prices from April 1st this year as per a formula suggested by a committee chaired by C. Rangarajan.
A criminal offence which is listed under the Criminal Procedure Code. So once it is any offence under the Criminal Procedure Code, if these decisions are taken in Delhi, say like conspiracy etc., the Delhi government has jurisdiction.
Union Cabinet based its decision on a Supreme Court judgment that allowed the government to fix the price of natural resources. RIL had first quoted a price of $2.34 million a metric British thermal unit to NTPC in 2004. However, due to legal proceedings, the gas could not be supplied to NTPC and the case is still pending in Bombay High Court. In 2009, an empowered group of ministers fixed the price of KG Basin gas at $4.2 per unit for 5 years. The period will expire in March 2014. The prices are expected to double if the Rangarajan formula is implemented. Kejriwal has asked the PM to keep the gas price hike on hold till the completion of the probe.
I don't think so. No, we have been sending wrong signals for a very long time, not necessarily by this police case. See, we have been altering policies, changing policies with each minister, the policies change. These are the things which are affecting investment.
Prime Minister's office has forwarded Arvind Kejriwal's letter to the Ministry of Petroleum for necessary action. However, the controversy over the formula to fix the price of KG Basin gas refuses to go away as several experts have criticized the formula suggested by the Rangarajan panel. Krishnanand Tripathi's report for Rajya Sabha Television.
Rajesh, so that's a big story. We didn't know that his own resignation will actually eclipse the first controversy of the week, as I just mentioned earlier. But just to focus really on what is happening here, this battle, that Mr. Kejriwal has launched against Reliance and the government, is it a political battle or is there an economic issue as well here which is worth debating?
This is not the first time Mr. Kejriwal has brought allegations against big businesses, and he did that before he came to power in Delhi. And I think as a political activist, he was absolutely within his rights to do what he did. The businesses he named, they have had their side of the story. The central government, which was sort of named in some of these controversies, the ministers from the central government have had their side of the stories to say. But the critical difference between what he did before he became CM and what he did last week in terms of bringing about raising the issue of switching the focus. He has targeted Reliance and Mukesh Ambani in the past, but this time it was over gas price, because gas price is something that gets into the household budget making of every Delhiite.
That's what he claims, that it will impact the lives of his vote base, which is the average Delhiite.
And if you look at how Mr. Kejriwal has gone about building his campaign, he has picked on issues that have been at the core as far as the Delhiite is concerned and his daily livelihood is concerned. And I think, it's a smart politician thinking, and you have to give him that credit. However, when you take up these issues as an activist, the redressal you seek, and when you take up these issues as someone in the government and the redressal you seek, the styles will have to be different.
So the manner of pleading for justice, quote unquote,
absolutely,
will be different.
So it's, if Kejriwal as a political activist had sort of dubbed this as something connivance, a conspiracy, and therefore tantamounts to criminal offence, and therefore had demanded police action or an FIR to be lodged, maybe you could have said, okay, well, that is how an activist responds to situations like this. But as a chief minister of a state government, is that the right way to go about it? I'm not very sure.
Well, but one could argue maybe that's the Kejriwal style of functioning, because it's gone beyond just this gas issue with Mukesh Ambani. He's chosen the activist route, continued to be an activist, even while he's been the chief minister.
So the jury is out there. It's yet to come out. There are people who believe that everybody is an activist before they come to power. But once you come to power, you are expected to dispense yourself in a different way, and there are justifiable reasons for it. My personal view is that, well, it is a very different ballgame when you are in power and when you are outside. The question is, it is always a tricky affair when it comes to pricing natural resources.
Sure.
Okay, we have been debating this for a very long time. There are the issue has been there before the Supreme Court. The issue has been there in the media domain. The issue has been discussed and debated by many experts. Broadly, there are two ways to go about it. One is that either you decide that on all such natural resources, the government will fix the rate, okay, or you will allow only government companies to do it. I think 2 decades ago, we took a conscious decision that we want to move out from a socialist style of economy to embrace a more market leveraged, market driven style of policy making, wherein we would push private sector to enhance efficiency.
So I really want to come in on this point. I mean, you have held several rounds of the NELP auctions. You've invited foreign companies. The likes of British Petroleum is partner now with RIL, and they have interest in this one particular block. What do you see unfolding in the coming months? Because the government seems to be quite sure that they'll press ahead with the gas price increase as per the committee formula starting April. But do you see all that going in limbo then? And then, of course, the future of exploration in the near term?
No, I think it is still not clear whether the action of the Delhi government in terms of ordering for an FIR would really hold back things that fall in the jurisdiction of the central government. And I think this whole debate over the jurisdiction issue will continue for some time. But now that the government has, assuming that he has put in his resignation and there will be no government in Delhi, my own assessment would be it sort of in a way would this whole thing would lose its relevance in the weeks to come. But that's not the issue. I think we have to go back, and this is where I look for consistency. I'm still not clear what is the Aam Aadmi Party's economic ideology. Now, if it is something which is a socialist ideology which doesn't believe in market economy, and then sort of pushes that, okay, the government has to price natural resources keeping the interest of the consumer as paramount, then one could probably justify that course. But if the economic ideology of this party or its leader is that, no, I want markets to also play their role, then I think this is something which is counterproductive, because if you are going to let we cannot go back to the era where we say, no, only government companies will harness these resources, because that hasn't happened.
Yes, okay. And they've not been able to do so in the past.
So you could, I think there could still be a case, because it is definitely something, and I don't think also the justification that has been given by some ministers in the government that, look, when you import gas, it costs you 12-13 rupees per unit, so even despite doubling of the price, it is still at 8 rupees.
So no, we have to arrive at how this 8 really came out and whether that's justified or not.
Yes, absolutely.
Okay. So, all right, we need to run into a very quick break. The last word has definitely not been said on this issue, but when we come back, we take a look at some of the macro numbers. Is inflation really cooling off in India? Back in a moment. Welcome back. Here with Policy Watch. Now, retail inflation declined to a two-year low in January, bringing cheer to consumers and policymakers alike. However, the good news on inflation was slightly offset by a decline in December factory output. Here's a look at how the data stacks up.
Retail inflation declined for the second consecutive month in January to a two-year low of 8.79%, helped by a moderation in food prices. Inflation measured by the Consumer Price Index slipped to 8.79%, its lowest since January 2012, when it was at 7.65%. Retail inflation stood at 9.87% in December and 11.16% in November. As per official data, vegetable prices rose by 21.91% in January, fruit prices rose by 15.6%, cereals by 11.42%, pulses by 2.59%, and milk products by 9.82%. The decline in inflation was, however, accompanied by bad news on the industrial production front. Factory output in December witnessed negative growth in line with the trend in the three previous months. Index of industrial production contracted 0.6% in December due to sluggishness in manufacturing sector. However, there was a slight improvement in the factory output data for November as the extent of decline was revised to -1.3% from the provisional estimate of -2.1%. The decline in factory production began in October last year when it registered a negative growth of 1.6%. Industrial production declined by 0.1% in the first 9 months of the current fiscal. During the April to December period, it declined by 0.1% against a growth of 0.7% during the same period in 2012. Bureau Report, Rajya Sabha Television.
Rajesh, so the government couldn't be any happier. First, the CPI numbers, which have come below 9%, and then even the wholesale price index later in the week showing a 1% drop. Is there reason to really rejoice? Are these numbers really up for real?
You could say the weather god is finally smiling at UPA. But this relief
they'll heave a sigh of relief. At least someone is giving them some elbow room.
This relief may have come too late, or we do not know whether it's going to be enduring for all time to come.
The question is whether it lasts till May. I think that's the critical question.
At least till the elections. Now, see, what seems to be happening is that yes, definitely there is a softening of the inflation curve, and that's primarily on account of food inflation. So we have had a significant drop in food inflation, I think from 14% to now under 9%, and this has happened predominantly in the vegetables and fruits domain, which really was responsible for the UPA's fate in the state elections. You know, there was a lot of anger that sort of manifested in the way people voted. I think because a good monsoon helped a good kharif crop, and I think the Rabi crop, prolonged winter has helped in certain areas in terms of wheat and all that, and these are all very encouraging and positive signs. And the good thing about the output uptick that we are seeing in agriculture is that it cuts across, you know, cereals, rice, wheat, oilseeds, cotton, pulses, all of that. And I think we still yet to get some more insight into the vegetable and fruits output data, but that you know, looking at the price trend, one would say that that's probably also getting better. Having said that, is this good enough? My fears are on two counts. One is that the core inflation still hasn't eased.
That actually shows a slight uptick in the data.
There was a marginal increase in that. And the RBI is going to be looking at the core inflation before it does anything on the interest rate front.
That's another point of discussion that has come about in the last, I think, couple of weeks since we saw the RBI panel report, whether the RBI is now more focused on consumer inflation, or is it still looking at the old-fashioned WPI number and then core inflation or non-food inflation within that? What's your reading?
In its assessment in January, it felt that the inflationary pressures are still there, very much there as a threat, and therefore it came up with a surprise repo rate hike. Now, there is an interesting thing that is going to happen. Yes, its focus is increasingly shifting to look at consumer inflation, because at the end of the day, most developed countries, you take the countries in the West, they all get guided by the consumer price index, not so much by the wholesale price index, and that makes your task much easier in terms of monetary management, and that's a lot better indicator to be guided by. However, our problem was the consumer price index was not broad-based. The consumer price index suffered from many drawbacks to be accurate enough. But the other downside risk that remains is that elections are coming, and everybody knows that
dole-outs are around the corner.
When elections come, also a lot of black money comes into circulation, and that sort of pushes up
inflation,
the economic activities, demands, and all of that.
So
what you have achieved with a very tight cap on your monetary policy and with easing of food prices, some of that runs the risk of getting reversed
with the
money that we will
impact.
see that will come into play.
So very quick last point on data. While at least there might be some glimmer of hope on the inflation front, with at least the agricultural output increasing, what about core industrial activity? And that continues to be a sore spot. Third month of contraction. Overall, I think April to now, or April to December, output is actually down 0.1, 0.2%. So what are we looking at?
See, everybody tends to blame the central bank and the high interest rate regime. I don't think that's the only factor in the Indian context. If you actually take a longer term look at the last 10 years, and all the broader parameters, they are not that bad. You're averaging a 7.5% growth. Inflation, if you average it over a period of time, 10 years, probably that still would be on a little higher side, but still manageable. You have had investment inflows have been pretty good. It is what I call bad PR and marketing management by the UPA government, which in turn has led to a crisis of confidence, something akin to what we saw in 1990. And that crisis in confidence has precipitated so much that it really has pushed a lot of businesses to hold back their investment, which ideally shouldn't have been the case. And then, people have talked about in the last 1.5 years how that whole policy paralysis thing within the UPA has sort of had a spillover effect.
Cascading impact.
I would say that it is more of some of these things which have played in, and typically when India goes into elections, you see an uptick in economic activities. So in the months to come, I would expect
the graph to start
a little bit of
higher.
turnaround, and then we'll have to wait and watch to see what kind of a government comes to power after the elections, and what kind of signals it sort of sends out, and that's what will actually determine how businesses will behave in the months to follow. If everything else that is happening around in the world
remains
not
equal,
change for the worse, then there are chances that things would get better.
Well, we'll take a very quick break on that note. When we come back, the government has already unveiled its railway budget. Does it give us any clues for the vote on account, which will be presented next week? Back in a moment. Welcome back. Here with Policy Watch. Now, the government did not hike passenger fares or freight charges in this year's interim railway budget. Even as the Indian Railways struggles to maintain its finances, the ministry is actually talking of some new concepts like FDI to enhance industrial connectivity, and also a dynamic price mechanism based on demand and supply, much like airlines. Here are the details.
As expected, Railway Minister Mallikarjun Kharge did not tinker with passengers' fares or freight charges in the election year. However, he announced 73 new trains, 17 of them to be premium trains known as Jai Hind trains. Anticipating a turnaround in economy this year, Railway Minister announced a total revenue turnover of over Rs 1.6 lakh crores. It estimates to earn over Rs 1 lakh crores from goods movement, Rs 45,000 crores from passenger fare, and nearly Rs 10,000 crores from coaching and other earnings without increasing fares.
It is a zero extra fare budget. There is no extra charge for passenger or freight. We seek to generate revenues by doing more, taking more passengers and loading more.
Railways has an annual plan of rupees 64,000 crore. Of this, rupees 30,233 crores is estimated to come from budgetary support. Railways is expected to have a surplus fund of rupees 8,000 crore during 2013-2014. Railways said that it would explore public-private partnership route and cost-sharing model with states to boost infrastructure and provide better amenities. However, a lot depends on the Railways' projection of turnaround in economic growth.
On the passenger side, we have projected a growth. We are expecting that things will improve during the course of the next year because the economy is likely to perform a lot better than it has done during the current year. Similarly, on the goods side, there is an increase of about 12.5% which has been projected.
Total working expenses have been pegged at rupees 1.44 lakh crore. That will leave a net revenue of rupees 19,655 crore and operating ration of 89.8%. It means Railways will have to spend rupees 89.8 against every 100 rupees earned by it. Railways is also grappling with huge outgo on pensions, which is pegged at rupees 27,000 crores. It has to set aside more money for increased dearness allowance and may have to provide for implementation of recommendations of the 7th Pay Commission in future. Krishnanand Tripathi's report for Rajya Sabha Television.
Rajesh, so for many people, the railway budget was to be a non-event anyhow, considering it's, just before elections. But anything that stood out for you, or did you really think it was a non-event?
It was a non-event, and it was a welcoming non-event because when elections are due in the past, in some of the interim rail budgets, the outgoing ministers have tended to make a lot of populist announcements, especially keeping an eye on their constituencies. I think Mr. Kharge desisted from doing much of that, and I think this is what was expected. At the end of the day, it's more of a vote on account, and it should be that way. And I think by keeping fares unchanged, I think it's a right decision because we should leave that to the next railway minister to do it. There are a few new lines that have been announced. There are doses of populism here and there, and doses of wishful thinking and some ideas, which is what you still do to make it get a few headlines.
Sure.
Yeah. So.
Which is why I picked out this point on dynamic fare pricing. Do you think it's more of what you just said, wishful thinking, or could it be actually a realistic scenario where fares will change?
This has been talked in the past also, and there is a case for that. But are we? I mean, do we have the infrastructure and the bandwidth to do it? I'm not. I'm not an expert on this, so I do not know if we have the capacity to do it. There is no harm in looking at something like that. It's definitely an interesting proposal. There are some countries in Europe and some elsewhere in North America do that, and
could be possible. Could be possible.
But Indian Railways is a huge network.
Sure.
I mean, we handle a lot more passengers every day than any other network handles in the world. So it's not an easy task.
That also brings me to the more critical question that is this making you hopeful that the government will not be completely populist and won't play all its political cards when it's actually looking at a very fine balance? We know our precarious situation with respect to our own finances, fiscal deficit. Do you have that hope when we're looking out for the budget next week?
Well, with Mr. Chidambaram as the finance minister, you can take a few smart guesses. I think the fiscal deficit is definitely, everyone is watching out, and it's under pressure. They have got some relief by way of the 61,000 crore that mopped up.
And that's increasingly what one reads in economist commentary, that it's the quality of how you're arriving at this number of 4.8%.
Yeah.
Is it just because there's a plus minus mathematics addition and subtraction that's going on, or are finances really back on track?
No. Our finances are hardly back on track because you could have achieved a bit here and there by stringent squeeze on spending, but your revenues are not doing well, especially the tax revenues are not doing well. which partly also a reflection of how the economy is doing. So we are not in a good shape there, and I doubt if the finance minister would like to risk more on that. So a few announcements which could be clubbed under so-called populism. I won't say populism. I would say, things that governments do have already come outside of the budget. The announcement about pay commission, the announcement about one rank, one pension, made both being credited to Rahul Gandhi, have already come. You may see a few announcements on the spending side vis-a-vis health and education, and a few things here and there. I don't expect that there would be any kind of a spending spree that would be coming out of this budget. It will be minor tinkering, sort of reallocation within the portfolios, because I think the finance minister would be very keen to send out the signal that that he is not doing anything in the interim budget that is going to worsen the fears that have been expressed on the fiscal management side. Okay. So I think it's going to, my own hunch is that this would be it will be more close to a vote on account. It will not be a vote on account. Vote on account is where you only take a mandate for a pro rata projections of both revenue and spending figures, and therefore people have started in the last many finance ministers therefore term it into interim budget, because they are going to do a few things on the spending sides, and they are going to make a few announcements. Sure. Some policy intended policy moves will probably be announced, and that's sort of tried. And I think what my sense is, what Mr. Chidambaram would be doing, he would be using this occasion of delivering that interim budget speech to highlight the economic achievements in the 10 years of UPA. Right. And there are quite a bit that they can take credit for, and there are quite a few they would sort of overlook, which is what you would expect. Well,
budget or interim budget or vote on account, the fact is it's always an event, at least in India.
It will be more of placing before the nation the 10-year report card of the UPA government.
Okay. All right, Rajesh, we'll have to wind it up on that. No, thank you so much for joining in. And of course, a reminder that yes, next week on Policy Watch, do join us, because we will be making sense of this vote on account with all the fine print. That's it for this week. Thanks for joining us.